Hello and good evening, everyone. I'm Abhijit, and welcome to a new episode of Investing Fool. Lots of things to cover today. It's a rainy evening in Bangalore. Every evening is basically a rainy evening in Bangalore. But more importantly, it's the end of July. So we'll do the end of July rebalancing. We have removed one stock and we have added one stock in our portfolio today. So we'll do that. Importantly, we also crossed 1000 subscribers recently. So thank you for all the love and support. We have been doing this for more than 8 months. We have been following this notional momentum portfolio. For me, it's my real portfolio. So, but yeah, thanks for all the support, and hope we continue to engage and learn in this small community, and hope this also continues to grow. One minor thing that I wanted to clarify, I wanted just to highlight before we move on to the main video, is that यार जो core portfolio वाला sheet है, right? So by default, anyone who has the link of that sheet can does have a view access, right? So on rebalancing days, I usually turn I turn that access off for like a few hours, a couple of hours usually, to make changes. When I'm making changes, I disable it and then I turn it back on. So उस टाइम में भी कभी कभी because it's rebalancing day and all of our the subscribers also know that this is rebalancing day, many people when they do not find that access, they try to request for edit access. So edit access I will not be able to provide. I can provide you with I've already provided to many people who have emailed me a copy of this portfolio, right? You can make another copies. So there you have the commenter access on Google Sheets, so you can make the copy and then revise it for yourself as you deem fit, right? तो इस मेरा जो शीट है उसका एडिट एक्सेस तो मैं नहीं दे सकता, बट व्यू एक्सेस जब भी whenever it's turned off on a rebalancing day, right, be rest assured that it will come back in like a couple of hours or 3 hours maybe at max. So yeah, anyway, बाकी सब अपडेट्स तो यहाँ पे चल ही रहा है. So let's start the video. So before we move on, just that all these stocks that are shown here as for educational purposes only. For me, it's my real portfolio. I've invested my money in these stocks, but I'm not asking you to go and invest your hard-earned money in these stocks. This is just to like learn. So please be like do your own due diligence before investing your money. Let's move on to the overview, right? So we are at the end of July and the portfolio is not at its all-time high. So as we cover points on this slide, we'll go back on the sheet and see what all things we are doing. So let's take a look at the month-on-month returns and chart. This has been updated till July. Okay, I'm not sure why the Nifty curve is not coming here for some reason. I'd put a copy of this in this slide as well. Let's just take a look at that. Yeah, so this is the page, right? So if you see here, the blue one is our portfolio value, which is basically whatever the portfolio value is. So whatever value is in this sheet, right, these are all notional values, right? So we started with a notional value of 1 lakh per stock, total 20 lakh portfolio value distributed across 20 stocks of the Nifty 500 universe, right? But that absolute value doesn't matter. The percentages matter. How much something is moving, how much versus how much something else is moving. All those things are material. How much is invested, that can be anything, right? It can be 50,000 also, it can be 1 lakh also, it can be 20 lakhs also, it can be 1 crore also per stock, right? So it doesn't matter, that doesn't matter. But if we see here, so this is the portfolio value, the blue line is the portfolio value, and the red line is if we had invested that same 20 lakh in Nifty index. Now I have not taken any Nifty ETF or mutual fund, so like let's just discount the tracking error for a bit. This is just the index, right? So this is as pure as it gets maybe. So if you look at the red line and blue line, so the blue line has spurts of outperformance in the middle, but then it comes crashing down जब कुछ भी हो जाता है, right? So this February thing that you see is when SEBI came up with that whole thing of stress testing and froth हो रहा है market में and all that. So stocks fell quite a bit, right? We had some drawdown in March also. Then Here you see this is the June 4 volatility. जब election results were not as per our expectations, market tanked. Obviously, we tanked with the market. Then again we created some alpha, and it was going good, going good till like almost mid of July, when the apprehensions around the budget started. And everywhere there was fear going on, right? So there we again lost it. We came back, we came pretty close to actually going below the index. We somehow managed above it, and then again we have started creating some alpha, right? So this difference around for now, it is around, let me just go back to the main sheet, it is around like 4% now, but it was like much higher, like 10-11% here, right? So and again this is not updated for today. So today again we fell back a little, but these things keep happening. If you see the month on month returns, right, for the last 2 months we have actually been underperforming the benchmark index. So Nifty 500 return in June 2024 6.9%, portfolio was giving 6.68%. Nifty 500 return in July 2024, which is this month, is 3.5%. We were at 3.2%. So overall, at the end of July, Nifty 500 had given 33.7 and we had like 38.41. So we had close to like 4.5% alpha there. Okay, but in general, the portfolio is below its all-time high. In general, that trend has been happening, that some Nifty stocks are going like growing very powerfully, but some of the momentum names seem overstretched. Some of the sectors seem overstretched, khas karke like defense and all. These seem overstretched, might consolidate for a while, might even go down. So we do not know. We'll wait for the market to give us the signal. Now, return for July we already saw 3.2 versus 3.5% for Nifty 500. Now coming to the masala of the video, maybe if you're here just for the names, so these are the names. We are exiting one small cap stock, which is Shobha. We held it for 61 days, so just above 2 months. We are entering one large cap stock, which is Oracle Finance, Oracle Financial Services, whatever. So it's an IT stock. So let's take a look at the screen. So how do we do this, right? So the basic like funda is this is your portfolio, right? Imagine this is my portfolio before rebalancing, right? So I will just check one by one of all these stocks whether it is there on the Momo India screener as well. So for those of you who do not who are new to this video, you can go and check out our previous videos on our strategy and the screener as well. And you basically get an idea of how we screen stocks, right? So we are not going to cover all that in this video, but we are just going to do the rebalancing, give a little bit overview on the rebalancing part, right? So let's say Trent is here, right? So I just have to ensure that all these stocks are within the top 50 ranks of my of this momentum screener, right? If they are not within the top 50 ranks, I will kick that stock out and I will, like, in its place I will put the next best stock. Okay, now there are some conditions around it, which you can see in the strategy tab as well here on this video. So I think this should be 200 DMA rather than 100 DMA, but anyway, if I come back here, so let's say the first stock is Trent, right? So I go here and I see Trent is there on rank 2. Similarly, like other stocks you can check like one by one. So when I did this exercise, only one stock, which was Shobha, was not in the top 50. So Shobha was like 64 or something, right? And then how do I find the next best stock? The next best stock is basically any stock that is the best rank, that is not yet in my portfolio. Now, if I look at this screener, right, all of these stocks I have in my portfolio except like the third one, which is RVNL. Now the problem with RVNL is that the beta, if you see, the beta is 1.59, right? And there is one criterion in our portfolio of rejecting top beta stocks. So this filter is already applied here, ignore top beta stocks. But how this filter does it, it removes the top beta stocks, like top 10% of stocks by their beta value, right? But we have created a like an absolute criterion also, that anything above 1.5 we are not going to invest in, right? So this is like 1.59 So we just ignored this and we moved on to the next one, right? So the next one that was there is OFSS, right? The beta is less than 1.5. So we went ahead with OFSS, and if you see this actually, for those just to again give you a little bit of context, removing high beta stocks will affect the CAGR, in the sense that it will actually reduce your returns a little bit over the long term, but it also reduces the max drawdown of your strategy. So that is something that you need to keep in mind. Now, going back here, so if we removed one small cap and we added one large cap, right? So portfolio composition again tilted a little bit towards the large cap. So large caps now constitute 70% of our portfolio. Anyway, this is kind of a conservative universe only. We haven't got any micro caps at all ever. So you can see this green box. This represents micro. This is completely empty, right? So now large caps have become 70% of our portfolio. The win-loss ratio, this is something that we calculate on the exits page. This remains unchanged because एक transaction से ज़्यादा कुछ होता नहीं है. So let's take a look at the exits page, right? So on the exits page, and yeah, coming back to, like, we are talking about rebalancing, right? So rebalancing, you just whatever number of units you have into the selling price, that will give you the exit value that you get, right? So that same exit value you will put in a new stock. Now this could have caveats in some situations, like for example, यार मैं बहक बहुत जाता हूँ, like I digress from one topic to another, but I want to cover it now only. If you see something like Cochin Shipyard, right? Cochin Shipyard has given like 187% returns. Now with 187% returns, if I have to sell today, right? If I have to sell today, वैसे तो होगा नहीं, because Cochin Shipyard अभी it is like the topmost ranked stock in our screener. So उसको गिरने के लिए this 187% has to become very less, right? So whatever it happens, right? Even if we exit with 100% profit, right? तो now that 1 लाख का notional value का stock has become 2 लाख का stock, right? So like it has become 2 lakhs. So I cannot go and invest that 2 lakhs straight away in a new stock, right? Because that new stock might start with a weight of 10% in the portfolio, which is not correct, right? So what we would do instead is, in those kind of situations, we can like handle it like both two ways. Either we can take some extra like some capital of that 2 lakhs and distribute it equally amongst the remaining stocks as well, or we can add another stock. मतलब 20 stock portfolio से we can make it 21 stock portfolio, and instead of adding one stock in place of Cochin Shipyard, we can add 2 more stocks, right? So that is another, anyway, like a digression from our discussion. So coming back to the exits page, right? So here we have the win-loss percentage. So win is basically any stock that has given us money. Loss is anything that has like lost us money. So Shobha obviously lost us money. We lost almost 16-17% here. There was capital loss. So, but the winners percentage is 43.2%, losers is 56.8%. What it means is basically we lose money on almost 60% of the stocks that we invest in, right? But the caveat here is that the average gain that our winners provide is like 20%. The average loss that our losers provide is 10%, right? So the winners are few, but the winning margin is more. The losers are much more, and there are repetitive losers also. Actually, in fact, OFSS we had already once invested in April. We got out in like 38 days, and it had lost us some fair bit of money, but yeah, less than soba. Anyway, so the average loss for average gain for winners usually compensates for the average loss for the losers. Okay. Average holding period, and we'll have it on the slide as well. Average holding period has increased by 1 day, so it was 69 day before. Now it has gone to like 70 day now. I think it's broadly, but broadly it is unchanged here also. Sector rotation trends. So there are some trends that are happening in the market. So we see that OFSS is an IT stock, right? So IT stocks had not been performing for some while, and recently they have started performing again. So some of them have started coming on the screener, but because we have a look back period of 1 year, right? So we are like taking like 3 months, 6 months, 9 months, 12 months average Sharpe ratio. Because of that, sectoral rotation trends, when they happen, it will take some time for them to reflect in our portfolio. So वो slowly आते हैं और थोड़ा सा slowly जाते भी हैं. So let's see how it plays out in the next few weeks. One news that came today, many of you will be aware, is the Q1 results of Zomato. We had discussed about it in a previous video कि August 1 को release होने वाला है, and it could be like 64% rise in profit or revenue. So the numbers came in. So net profit was around 250 crores and revenue was up 74% year on year. So the stock was up, I think 3 or close to 4% on at least as per the Google Finance API. So yeah, so there's that news. So you can see Zomato, it was going up, then this huge fall came, then it again consolidated, went up, crossed this high, and today it has created a new high and it is going up and up. And beautiful chart, like it can continue going up for a long time. We'll have to see. Stocks like Trent, Zomato, like these have been, we have been holding these for some time and they have given us good returns. So momentum definitely rewards patience. It rewards the right amount of patience if you have it. We already discussed this. If you look at the change and like on the month-on-month returns, so it has been a good market in general for the past like one and a half year, right? So there would be times when consecutively these will be red boxes or everything will be red, right? So we haven't come to that territory yet. So so we just have been fortunate that we are part of a good cycle. So every month is giving you additional like returns in green. It doesn't happen this way, right? We cannot be saying that 38% returns for any calendar year or financial year is normal. These are not normal. These are completely abnormal, and sometime or the other, I'm not saying they will end tomorrow, but sometime or the other, we will need to keep in mind that these times will end, right? Okay, so outgoing stock is Shobha. As we saw, it is basically consolidating. It is not falling as much, but as I mentioned in the previous video also, momentum is about relative ranking, right? So something else performs well, it comes out on top. You are not underperforming a lot maybe, but relatively your performance is not that good. So holding period was 61 days. We held it for 2 months, and my personal view is that this is in a consolidation phase and it will come back. It will come back very hard, and all the real estate names will continue to perform. The real estate sector will continue to perform. Yes, it has थोड़ा सा ठंडा हो गया है in the last I think 1 month. We can look at the sectoral indices, right? So how is the realty? So yeah, realty is only 0.92% in 1 week. In 1 month, it has actually given negative returns, right? Compared to, let's say, compared to IT. IT has given 9.14% return compared to Nifty realty, which is at negative returns, right? So in the near term, there are a little bit concern maybe, but when real estate cycles start, they go long and hard. So these are multi-year cycles. They do not fizzle out typically in like 2-3 years. So let's see how the real estate pack performs in the long term. For now, because we have like our system as per the WRH, which is the worst rank held criterion. So because it has dropped beyond 50, we would have to stick to our system, and we have exited Shobha. Even though personally, I feel a little bit of conviction that this stock might come back hard and it will continue to perform. Okay, now incoming stock is OFSS, as we discussed, large cap stock, 94,000 market cap. If you look at the returns, not as good as some of the stocks that we have seen. So earlier we have the Power Finance Bros, PFC and REC before we started applying the top beta, like the high beta filter. So they had like crazy returns, and something like GRSE, Cochin, these have crazy returns. So OFSS returns are much more muted in that respect, and IT being a defensive space, it is kind of expected also. Plus it's a large cap, right? It's not like a persistent or a KPIT or something, right? So the 1 month return is 7%, 6 month return is 69%, 1 year return is still 182%. That's a lot. Like 182% in 1 year is quite a bit. Q1 results were recently declared. Net profit was up 23%, revenue was up 19% year on year. The index itself has performed good, so it has surged 9% in 1 month, as we saw. The stock has an RSI of 66, so you can see it has, like, it corrected quite a bit here, and we sold somewhere around here only because it started falling. Then it kind of like went a parabolic move and went straight up, and then after that the pace of increase has slowed down a bit after it crossed this all-time high. But it is in a nice channel. I would say it has fallen around 4-5% from its top, but yeah, no forward-looking statement where it can go in the future. We do not know. Only the market knows that. RSI of 66 is fairly okay because we have bought stocks at RSI of like 88. Also, like GRSE I think was 88, and still now we are sitting at with like 9% loss on that counter. So RSI of 66 is still pretty conservative by that standard. So that is basically it for today in terms of the rebalancing. Let's take a look. Let's take a quick look at the Nifty top 10 portfolio. So we have one change there. We will talk about it in another video probably tomorrow. But the change is that the exit return, as I say, is very hard on this. So what we exited from NTPC today with a loss. And I might need to do some corrections here, like minor date and all may be a little bit off. No, I think it's fine. Everything is fine. So we sold it at a profit of like 21%, and we invested that money back into the new stock. So the new stock was Sun Pharma. So there is another screener that I've created on this Momo India screener portal only, which tracks the Nifty top 10 portfolio for me. So this is the change in Nifty top 10 portfolio. It is going pretty good, I would say, like 4.3% alpha in the like topmost 50 stocks. This is kind of lucky because it doesn't happen. It is very difficult to actually find outperformance from the top 50 stocks. मतलब उसमें मतलब ज़्यादा कुछ churn होता भी नहीं है, and like it is relatively difficult to create an alpha there. So anyway, we'll discuss about it in another video. And if we look at the all-time performance again, as we discussed, we are at 3-4% above the index. And yeah, that's pretty much it for today's rebalancing video. So let me know how you like the content. Comment on what changes did your portfolio make if today was the rebalancing day for you, and what do you feel about these stocks. Let us know in the comments below. Any other thing, if you are new to this channel, then and if you like this kind of content, then please consider subscribing to this channel, and I'll see you in the next video. Till then, have a good day. Bye bye.